Yo, hello traders, it's your one and only Forex Q coach, Tim Legend, and I'm super excited having you all here today on this one. Alright, if this is your first time on my channel, could you do me a little favor? Hit the subscribe button, turn the notification bell on so that you don't miss out a single thing. Because right here in this channel, all I do is to post content that help you win in the financial market. So hit the subscribe button and turn the notification bell. Now let's begin. What does your trading plan state? Now, according to this 9-box strategy, you can see here, it says number 1, markets, number 2, time frame, number 3, risk management. All right. Maybe you guys are going to go watch this video and learn it and use it to create your own trading plan around it. Okay. Number 4, conditions. Number 5, entries. Number 6, stops. 7, targets, daily stop, daily target. Now let's start from number 1. Number 1 means the markets. When you enter the market for the day, you want to check out which of the markets do I want to trade for today. Remember what I told you guys, that if for me, whenever I get into the market, if I want to, because I want to catch only spikes, if that day I've decided I want to trade just boom and crash, because there are days when I come and I say to myself, I want to trade currency pairs. Sometimes I can decide to trade volatility index. All right. But any day I made up my mind that I want to trade boom and crash, what I want to look out for is which of the markets should I trade for the day. I only want to trade those markets that are going towards a spike direction. If boom is buying for that day, I'm going to trade boom because I'm catching spikes. If crash is selling for that day, I'm going to trade crash because I'm catching spikes. That is what number 1 says, markets. All right. Number 2 says time frame. Now, time frame is when you've entered the particular market you want to trade, here your analysis begins. Your time frame, you're observing the time frame, which your entry time, your lookout time frame, your confirmation time frame, your entry time frame, and all the rest. Number 3 says risk management. After you've done all your analysis on all your time frames, what are you waiting for? You're waiting for your entry, isn't it? But before your entry should come, you should have arranged what you want to risk. I'm willing to risk 1 to make 3. This is my trading rule. I'm willing to risk 1 to make 3. So if I'm done with my analysis and I see that the analysis I made is not willing to, is not able to grant me a 3% target, I might likely say to myself, I'm not trading this market. It's my rule. I own the rule. All right. I might likely say to myself, I'm not trading. Or even if I say, okay, let me just step down a bit. Okay, let me step down to 1 to 2 risk to reward. If that market is not able to give me 1 to 2 risk to reward, I leave it and look for another market. There are many markets. There are many booms. There are 3 booms. There are 3 crashes. Is your trading plan, and you stick to it. A lot of traders have trading plans, but they don't stick to it. All right, you must learn to stick to it. Then once you have figured out your risk to reward, your risk management, your risk to reward ratio, the next thing is condition. What's the condition? Condition in the sense that, what am I looking out for before I place an entry? Okay, I'm waiting for this price to get to my key level. I'm waiting to see if I can see a pattern like double top or double bottom. I'm waiting to see if I can see some candlestick rejection. These are my conditions. If I don't see those conditions, I might likely not take the trade. If I see the conditions, the next thing is my entry. Where do I want to trade from? Do I want to trade after a pullback? Or do I want to trade break and retest or breakout? All right. Number 6 is your stop. How much are you willing to risk? Here it says by percentage or away from market structure. That is where, this is where do you want to set your stop loss? To say, if you place your entry, where do you want to set your stop loss? And if you remember when I was teaching you guys, I told you when you place your entry, make sure your stop loss is below. If you are buying, make sure your stop loss is below your support. Don't ever enter a running trade, a trade that has already left your key level, whereby you force yourself and say, oh, it's buying, and you buy along, and your stop loss is above your support. If price decide that it wants to go and touch that support again, it means it's going to hit you out of the market. So you must make sure that before you take an entry, you have decided where your stop will be. Then number 7 is your targets. All right, your targets. How much are you targeting? If my stop is a 1% stop loss, then what's my target? I should be targeting at least a 2% or 3% take profits. If I can get take profit 1 and take profit 2, I should leave the market for the day. Then number 8 is your daily stop. How much am I willing to risk totally for the day? Right here, you can see I'm willing to risk 5 to 10% of my capital for the day. So for instance, if I have a $100 account, all right, if I'm willing to risk 10% of that $100 account, that should be about $10 for the day. All right, $10 if I'm correct. So it means that if I get a loss of $10 for that day, I'm out of that market, because it's if I risk more than that, it's going to deal with my emotions. But because I've decided within myself that I'm willing to risk $10, it won't deal with my emotions much, because I decided it, and I know the rules of trading, that loss is inevitable. It can happen sometimes. So if I risk 10% of my account for the day and price ended up hitting my stop loss and hits 10% out of my stop loss, I leave the market totally for that day and come in the next day. Why is that? Because if I decide to stick to that market and I want to get my 10% that I lost back, I will continue to lose and lose till I can even blow that account. So I stick to my trading plan and my rules. If I've lost 10%, no matter any other setup I see, because you will likely see other setup that will be promising you, guy, come and trade me. I will give you. Don't mind it. Stick to your rule. I've lost 10%. I'm out of the market for that day. All right. That's for your what? Daily stop. Why? For your daily targets. Since you're risking 5%, you should be targeting 15%. Or if you're risking 10%, you should be targeting 20%. So this simply means that if I make up 15% to 20% of my capital per day, I'm out of that market, because this is where greed will play. If I don't stick to this number 9 rule, greed is going to play against you. Oh, I've made $100. Yeah. If I can make $100, I can make $200. Let me trade again, and you start losing it. Yeah. All right. So I hope you get the logic behind this. So as a trader, you must have your trading plan. Very, very important, and stick to it. Stick to it. Be strict on it, because your trading plan is a strategy alone of its own. It's a strategy that helps your emotions. It helps your psychology. That's what it's helping you do. So stick to your trading plan, because any day you overrule that trading plan, you've crossed the line, and that day your emotions might be dealt with hard if markets plays bad against you. All right. So that is one way you can really avoid all those kind of unnecessary losses of losing exactly what you've made and all the rest. For the meantime, traders, stay safe. Make sure you keep practicing and keep winning. I remain your one and only Forex Skill Coach, Tim Legend.
Please hit the subscribe button and turn on the notification bell.